What is going on, guys? Welcome back to another episode. And Bitcoin is holding strong, sitting right up around 34,000 after that big pump. We're going to talk about that. We'll look at it on the charts. We'll go through some news, some FUD, and then we'll see if there's any trade setups out there. So with that being said, let's get into it. All right, so first up is the headlines. And this one we have to talk a little bit about because I would typically put this in the TA, but because other people are talking about it, some of the other influencers, I want to make it a headline because I want you to understand a little bit what a golden cross is, right? So it's using the 200-day SMA and the 50-day SMA. So when that 50-day SMA crosses to the upside of the 200, you get what's called a golden cross. Now, this kind of comes back to more traditional stocks. The S&P 500, after a golden cross, typically you'll see a return of about 15%. And what do you typically expect? About 10%, right? So a little bit better on average. However, if you really look at a golden cross and you do a little bit more of an analytical approach to it, you got to be careful because you got to understand that a golden cross is delayed. And because it's delayed, what you might see, or I would say probably more likely to see in crypto because it's more of a volatile asset, is more marking an end of a trend, if that makes sense. But, that's just my own take on it. Thought I would do it a little bit of lip service. Some people get excited. Some people get a little bit more bullish when it comes to a golden cross. And that's understandable. We are in an uptrend right now for Bitcoin. So it does make sense. There is some bullish sentiment. All right, so let's talk about another bit of good news. And it looks like China's starting to soften their stance a little bit on NFTs. So they are starting to be a little bit more permissive. They have actually allowed some trading of NFTs now again. And that's probably good news, right? So it means they're starting to come around to some of the blockchain technologies. But really what they're trying to do, I think, is control it. And they're trying to really incorporate their own. All right, so there's a little bit of FUD out there. People are talking about Biden's regulations that they're going to come out with on Monday, the 30th, but it's really supposed to be in regards to AI. So I'm not really sure the impact it's going to have on crypto as a whole, but I guess there are some assumptions that it might spill over into crypto, and we'll kind of see how that plays out. So be ready on Monday. I'd say be on high alert, because there could be some potential movement of crypto if something comes out in regards to that. But just to give you some context and background to what I'm talking about here is Biden did actually restrict the sale of some chips to China, and that's all in regards to artificial intelligence chips, mostly I think by NVIDIA. So you saw a little bit of a dump in NVIDIA stock. But again, Monday, keep your eyes out for this one. Just wanted to give you a heads up. All right, over to the market update. You can see we are at a $1.3 trillion market cap and a 24-hour trading volume of 134 billion. That looks good. Bitcoin market cap dominance is at 51.17%. So you are seeing a little bit of a rotation out of Bitcoin. It had its pump and then it kind of rotates into the alts. That's pretty normal. And then let's look at the top 10. Bitcoin, Ethereum, 1, 2. As always, over the last 7 days, Bitcoin's up 13.4%. Ethereum is up 10.1%. BNB is up 5.4%. XRP is up 4.3%. Lido staked Ether is up 9.3%. Solana up 7.6%. That's been a pretty fast riser here recently. And then Cardano is up 11.5%. So that's good for ADA holders. And then Dogecoin into the top 10 at 12.6%. All right, let's take a quick look at the crypto derivatives. And you can see the 24-hour trading volume is down significantly for most of them. Anywhere between, it looks like 30 to 63%. So the volume is going down. We are at, I'd say, probably a key level of resistance. All right, so over to CoinGlass, let's look at the liquidity map. Sometimes the price tends to chase those areas of liquidity because they're trying to wipe out some of the shorts and the longs. Right now, you can see, I'd say the bulk of the DGen plays is really on shorts. And there's a liquidity level at about 34.5. That makes sense. About 121 million there. Now, I do think this is Binance specific. And then there is another area at about 34,463, and that's at 100. That's got about 140 million. And then the DGens are sitting at about 34,348, and that's at 131 million. So that's risky business right there, right? The people that are using leverage and shorten, they have a lot of liquidity there. That's risky business. They could get wiped out. So, just a nice little thing to take a look at, because sometimes it'll drive some of the price action when we get into these ranges, right? They like to clear out all that liquidity before we actually get a move. All right, guys, over to some TA, and I have a super crazy bearish take. Now, I'm not saying this is going to play out, but I was just messing around looking at the charts. I zoomed out. I was looking at the weekly, and what I'm seeing, it's not textbook. So let's get that out of the way before you're like, it's not a bear flag, but it's kind of looking like a bear flag. So if you're looking at it from top to bottom, and then you're taking this parallel running channel, which would be a flag, and it lines up almost perfectly to the 382. So technically speaking, the 382 would be that area, that textbook area, so where we could see the price to continue to the downside, right? So you enter into the pattern from the top here, you're coming down and right, you get into the channel, which would be the flag, and then it comes back down. Now, if you measure from the top all the way down here to where the flag would be, you can't even go that far down on the chart. Like Bitcoin can't go into the negatives, which is where this would take it if it were to play out. So again, I don't think it's going to play out, but I just thought it was interesting and something, I wanted to look at. So let's go ahead. We'll go to some smaller time frames and let's get a better idea of where we think we're going to go from here. All right, so let's look at Bitcoin on the daily, and there's a few interesting things to look at here. All right, so looking at this channel here, you have the top part here acting as resistance. You got multiple touch points, and then you have the lower area acting at some point as resistance, but then ultimately as support. And you got multiple touch points along that support level as well. So you got this channel, all right? So it's ascending, it's going up and right. And then we had this, this big pump here that went from really one side of the channel all the way to the other side of the channel, and it broke out of the momentum wave. So I went back and started looking at, Bitcoin over time, and there's not many times, only a couple times, that it even broke to the top side and actually had a gap there over the momentum wave. So that was really interesting to me. So is it no man's land? Maybe, but let's look at some other indicators, right? So one of my big things that I like is the Fibonacci retracement tool. So we're basically just going from swing low to swing high here, and that's our local high that we just had. And, it could pull back to these regions theoretically. Am I super confident in that right now? Not really, because there's a lot of FOMO backed behind these moves, right? So, if FOMO is unpredictable, but let's look down at some other indicators here. First thing we're going to look at is the prime oscillator. So looking at that, you can see that it's really in the overbought range here. All right, that's that indicated there by the orange, and it goes up and it touches this red line here. So I went back and I was like, well, what does it typically do when it gets up and it touches that red line? So you can see here, and it looks kind of similar, right? You get very overextended. You have money flow starting to turn down. You have the BBWP saying that we could be potentially at the end of the trend. That's what you see when you see the red there, is that, hey, we might be fizzling out a little bit. And that's kind of what it looked like. Kind of fizzled out and it just kept going. Kind of had that Bart Simpson effect. I don't know if you guys remember that video that I made. I don't know. That's probably a month ago now, maybe more. Actually, it was significantly more. But looking at that, I was like, hey, it could be forming that Bart Simpson pattern again. If you tighten it up a little bit, you can kind of see like a Bart Simpson head. But, ultimately fell down, and look how significant this was with money flow, right? So we got below the green line, it starts bending back up. And then you look at BBWP, you see here, these blue marks are indicating, there's likely going to be some volatility. Now, it doesn't mean it's going to go up when you see blue lines. It just means there's going to be volatility. But what happens, you get a little bit of divergence here with price. Price is kind of eking down. And then you can see the prime oscillator is actually moving up and right. All right, so you're getting a little bit of divergence there. So that could have been an indicator, based here, looking at this, right? See the money flows going up and right. You can see that there's blue marks there indicating that there's going to be some kind of volatility. And then boom, we start taking off. If I remember correctly, I think I was saying 31.6 or 31.8 was kind of a line in the sand for me, somewhere around there. So we took off, and now we're kind of present time frame, right? So we're up by the resistance level that is clearly marked here. All right, so I did actually make a trade based on that, because if you look back too, there's kind of a horizontal line of support here, Now, it was both support and resistance. If you really look at it, you can see there's support there, resistance there. It ultimately broke through, came down. It was support, and then there was a little bit of resistance, and then it broke through again, came down, support, support, and then it really broke down, right? So there's kind of a zone here. It's not a hard number, but I did have a line drawn. I want to say it was around like 35,107, if I remember correctly. But now I've just got the local high marked with the Fibonacci retracement tool. But you can see there's some correlation there, right? So if you're looking in the 31 or the 35.1 area, there's definitely some correlation between this channel right here and there being a horizontal line of support slash resistance. Okay, so really resistance right now. So that zone we're kind of flirting with. And so for me, I thought that there would be some consolidation here, and I would lean towards it being more likely for a pullback, technically speaking. But do we find support here on this momentum wave? That would be very interesting and something I'm going to keep an eye on personally, just because I like to see how it interacts with some of these indicators. But I mean, looking here, like we're overbought. We seem to be very extended here, and the flow is really turning back down to the right. BBWP is saying that we are nearing essentially the end of a trend, right? It should be kind of calming down and really starting to consolidate in this area. So that's kind of my expectation here. All right, so let's say it pulls back. What are some things that I would be looking for if I was going to enter a trade, right? So you want to come back for me to one of these Fibonacci retracement levels, the 236, the 382, and then you want to see if it finds support. All right. So maybe you get a nice wick off of one of those areas to let you know that there is willing buyers. So what do I mean by that? Like, so if you're looking at the candles, what you want to see is the body of the candle, but then you want to see kind of a longer wick underneath of it, right? So that means that somebody there is willing to buy in that area. So that's one of the things I'll look for, just kind of to tip me off. But then I come down and I look at some of the indicators, right? So one of the things that you'll want to see on the prime oscillator, right, is it's trending up and right, right? You see this right here. You see price actions kind of going horizontal. So it's found support. And then you have the oscillator starting to push up and right. And then for me, I do like BBWP. That's a volatility indicator, and that's really based on the Bollinger Bands. We're in an area that we could see some volatility or some movement, okay, or start a new trend. And then here, you look down and you look and you see money flows is going up and right too. All right. So now all of this is lining up. Now I'm going to quickly talk through a trade that I made. This one was a little bit of a DGEM play, but like I said, I had identified a horizontal level of resistance. I have now identified a channel that was moving up and right. You got these two parallel lines as resistance and support. And when price pumped up exponentially, like I said, I was looking for a little bit of a pullback or at least some kind of resistance in that area. So it was a very quick play. Now, when I say, I'm looking for wicks, you can see there was that wick here. It came back down, wick here, wick here. There was people that wanted to sell at that position. So that made me a little bit more comfortable that we were going to find some sort of resistance there. But of course, the more times you test it, at that point, it gets a little bit more scary. All right. So I got into this one pretty early on, had that big pump up, and I was like, okay, it'll probably come up for another retest. I went on the 4-hour chart. I saw the prime oscillator was coming down and right, and I saw that money flow was coming down and right. Now, this was on smaller time frames when I looked at it. Okay. So that was kind of the basis of my entry there. Now, again, it was a little bit of a DGEM play. I went very high leverage on this one because I was only looking for the smallest of pullbacks. I only needed a couple percent or 1%. I can't remember exactly what it was for it to pull back. And I ended up closing the trade with 30% profit, which is really, really good. But again, it's a little bit more risky because we had all that FOMO in the market at the time. So, here nor there, it ended up being a good play. And then I followed it up because I was just watching. And I was like, all right, let's see if we test this level again. Let's see if we test it again. And we were, but I could see it was losing a little bit of the pop. It was losing a little bit of steam. So I made another little play once I saw a good wick. I pulled another, I think 5% off another trade. Again, it was a high leverage trade, but I just saw that the price was pulling back a little bit. And now we're really at current state. If I would have held that one, I would have made a whole lot of money, but it's all good. Here we are at 34K now. Ladies and gentlemen, thank you for watching this all the way till the end. I truly, truly appreciate it. And if you enjoyed today's content or if you got anything from it, go ahead, give me a like and subscribe. That would be awesome and that would really help us. And if you're not following me on Twitter, get over there, follow me on Twitter because I am doing daily analysis during the week. So anything I see on the charts, I'm putting that in Twitter during the week. You'll get your fastest updates there. I'm only doing videos maybe weekly, every 2 weeks. So with that being said, you guys have a great weekend.